Do you want to catch amazing trades like this one for 1 to 6 risk to reward ratio? Today I'm gonna show you how I personally caught it from A to Z. And this was as well a trade that I caught on my 4 traders funded account, as you can see exactly right here with the exact entry, partials and take profit final. So let's break it down right now. So first things first, we need to understand how my strategy works. So I personally identify first of all my trend and I follow the trend as close as possible. So first things first, you see this was a really nice refined entry with a 15 pip stop loss, but first things first, I go on a higher time frame. So if I delete everything right here that happened, we're gonna go a little bit back in time exactly right here where I was analyzing the chart. So first things first, I'm gonna go on the 4-hour time frame to identify my bias and my trading range. This is the first thing you need to do, because if you don't have an overall time frame bias, you will not be able to trade with the trend and you will may be caught in some random losses for some counter trends if you're not prepared to it. So on the 4-hour on USD JPY, exactly right here on the previous Friday, we were looking at this. So what you can see right here, we were overall in a pretty solid downtrend for a while. If I zoom a little bit, we were really in a pretty solid downtrend. So now you will tell me, okay, we're bearish, so we should look for some sells. But not really, because if we focus on the current price action, not the price action that happened 2 weeks ago or 2 months ago, but on what's going on right now, we can see that instead right here of having this bearish trend continuing, we instead have some bullish momentum with this move right here. And actually the last break of structure to the downside, we had this one and we have this one too, but the most recent break was instead to the upside. So as you can see right here, the last break to the downside was actually here and here, but afterwards we start breaking structure to the upside. So as you can see right here, bam, and we broke structure to the upside here again. So basically the trend is switching from bearish to bullish. And by the way, I identify my break of structure from a body closure to another body closure. I personally in my strategy don't include wicks. So as you can see right here, this is how it looks like. So even if we had some bearish market structure for a while, now it's switching bullish. And some people might tell me, okay, but this might only be a liquidity sweep, you know, price might just sweep the liquidity right here before pushing down. But that's why one break of structure is not enough. I actually need 2. And at the first break, for example, when this happened, I was not looking for buys yet. This is for me not strong enough. But after that, we got a little pullback and another break of structure. And we as well broke a previous range here too. So as you can see right here, now the liquidity that was situated here pretty much got swept and we never retraced, you know. So basically for me, this is a strong enough confirmation to consider a reversal. So I broke structure here, here, and the previous range. So this is when I was looking for some buys. So now we'll identify my current trading range. So for identifying my current trading range, I just need to identify my last break of structure. In this case, it was right here. And I will take my Fibonacci from the bottom to the top to identify my valid POIs. So I'm going to identify first my valid POIs on the 4-hour, in the previous trading range right here, and in the current trading range. So in the previous trading range, we had this 4-hour POI according to my strategy with some inducement, and we have as well this 4-hour exactly right here. But in our current trading range, we have as well maybe this, no, this is not valid because it's not connected to any imbalance. So for me, that's wrong. Now, I don't have anything else on the 4-hour, so I can go as well on the 1-hour to see what's going on here. On the 4-hour, we have nothing. So on the 1-hour, we have this 1-hour POI exactly right here. And except for that, we have as well a 1-hour POI in the bottom exactly right here. And that's pretty much it. So now we have a lot of interesting POIs. So what do we do with all of them? We're gonna try to filter them. First of all, the one on top right here. As you can see right here, this POI is in the discount, so below the 0.5. It has some inducement, but those ones are way better just because for the fact that we have the liquidity that is situated below the range exactly right here. So this is some inducement for the POI below. So let's see what's gonna happen. For entering the trade, we need the price to come back into the POI and then wait for a 15-minute break of structure / change of character / market structure shift. So let's see what happens here. So as you can see, this one got completely destroyed, so we can remove it. And now we tapped instead in the POI on the 4-hour below right here. And we as well swept the liquidity right here, so we got a liquidity sweep. So now we can go on the 15-minute to see what's going on. On the 15-minute, we need to break this high so we can have our market structure shift / break of structure to the upside. Why this is the high to break? Because the last break to the downside was right here, and this is the last good valid pullback. Those pullbacks are not valid. This is just some push down. So let's see what happens next. Bam! Price broke structure to the upside. So now we got all our confirmation to look for an entry. We're gonna take as well our Fibonacci from the bottom to the top, and now we're gonna identify our most extreme POI that needs to be below the 0.5. So we're gonna start on the 15-minute, but on the 15-minute we don't have any valid POIs, so I'm gonna scale down into the 5 minutes. On the 5-minute, as you can see right here, it's the same problem. We don't have any valid POIs. Why? It's because every POIs that we had that were valid got already mitigated, as you can see right here. So we cannot use mitigated POIs. We need a POI that is completely clean without any price action inside of it. So nothing on the 5-minute, let's scale down into the 1 minute. So now we can have a really good and refined entry. So on the 1 minute, we do have this 1 minute POI exactly right here that is valid. And except for that, we don't have anything else, except if we push down exactly this white candle that is as well a valid POI, and below that we don't have anything else. So now we have two POIs. We have this POI and this POI. Both of them are valid POIs in discount, so below the 0.5. However, one of them is way better for an entry than the other because one of them is more extreme. This means that it's the lowest POI in the trading range if you want to buy. If you want to sell, it would be the highest. But in this case, we want to buy, so this POI is way better. And if you place your entry exactly right here, stop loss below the low, you will see that the take profit will be way better right here, you know, for example, if I target this overall high 113, but if I enter here it's only 106. So you see the risk reward ratio at the extreme POI is way better. This is why we're gonna take the entry from the most extreme POI. So now where to place your limit? You're gonna place your limit at the most extreme POI. Your stop loss will be below the 15-minute range exactly right here. Don't place your stop loss too tight because you might get swept with some liquidity sweeps. Instead, add a few pips around pretty much 1 centimeter visually on the chart, so some around right here. And for your entry, you're gonna add a little bit of pips as well to cover your spreads, and sometimes price as well comes close to mitigate the POI and then just leaves. So if, for example, you added a little bit of pips, you would be in and you would avoid a missed trade. So this is how the entry should have looked like. Maybe something like this, stop loss below the low right here, and perfect. 1-to-3 risk reward ratio at the high right here will be your first take profit. So at the take profit number 1, like I showed you in my entry previously on Trade Locker, we will take some partials, so for example 25% or 50% of the position, and your take profit final according to the strategy should be at the hourly high, sorry. So exactly right here. Now you will tell me, but this is a huge risk to reward ratio trade. Like, this trade is just huge. So this is why, instead of targeting the overall 1 hour high, to be more safe and to secure some more profits before that, I just targeted, for example, this 15-minute POI exactly right here. So the risk to reward ratio was still pretty good. It was still around a 107, 106, and you are still able to have a really good entry. So let's see what's gonna happen. So exactly right here, price pushed up and we pushed up and up and up before straight away pushing down aggressively. In this case, some people might get scared and not enter in the trade because of the aggressive price action. But don't worry guys, an aggressive price action doesn't mean that the trade is not valid. If all the other rules are respected, you should trust the strategy and enter the trade. At least this is how I personally trade. So let's see what's gonna happen exactly right here. So this is what I was explaining. If your stop loss is too tight like this, you might have been swept, and this is something we don't like. So this is why your stop loss being a bit bigger is actually a good thing. So let's see what's gonna happen exactly right here. As you can see, then price reaches our 103 risk to reward ratio in this area right here. So at this point, you will place your stop loss to break even to secure your profits and take some partials out, and then you will just leave the trade playing out until the final take profit. As you can see, that happened right here for around a 1-to-7 risk to reward ratio. Another thing that I just want to mention is that right here we had some news events. So at that moment where we had this candle at 10 a.m. for my time zone, there was some news events. But after that, after news passed, we placed back our limit and we got in after news. That way we didn't risk to get swept before or after news or during news. We waited for the volatility to calm down and we got a re-entry before price reaches our 1-to-3 risk to reward ratio. That was our partial level. So that's it guys, this is a really simple trade according to my strategy. If you have any questions, don't hesitate to just send them down in the comments, and if not, don't hesitate to subscribe to For Traders. And guys, we have a 15% off on all challenges if you use the code KOSHKA. So don't hesitate to use the code and get funded now.